Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So first of all, what do you need to know as we go into a new week here? Well, we have again seen that dollar strength come back into the markets over the month of May so far. Last week, of course, we saw another weekly gain for the dollar. This put pressure on the metals, with gold, silver and platinum all retreating today as the dollar has benefited from that safe haven currency status, driven by fears over a second wave of the coronavirus infections. Not only has gold pulled back, but also crude oil as well. With that, let's move over to the charts and I'll talk you through exactly what we're looking at here as we go into a new week. So first of all, if we have a look at gold, which is trading at the moment at 1,695 US dollars per ounce. Note again where you've had that typical bull trap, not only on Friday on the non-farm payroll, where many traders would have got trapped on the breakout, expecting the negative non-farm payroll data to potentially provide support to gold. But this time of year, you want to be very careful of that. Over the month of May, we have seen hedge funds and money managers yet again in the latest week. They have trimmed their net long positions on gold. And with that, we are seeing more downward pressure at the moment. Gold is back sub 1700. However, I would look at this as an opportunity this week to buy on dips here. At the moment, we've had another retest back towards the lower end of the channel, which you can see here very clearly, where gold on Monday, we've seen the usual counterflow move. In fact, another bull trap earlier on in the session here, where some traders would have started to build their positions above 1700, where gold broke out to $1,712 and has subsequently reversed back to 1695. Now, this is very common to see this counterflow at the start of the week here, and I would look for the potential of support to then start coming in from Wednesday onwards for gold. The question is, how low will gold get in the interim? You can see here very clearly where we have lower highs and also higher lows at the moment. So we're building up into a consolidation here with gold, where effectively there's great opportunities to trade the range. As I mentioned last week, we were really looking for that opportunity with range bound trading. That's exactly what you want to be doing at the moment. So you look at opportunities to bank at the upper end of the channel, potential to reverse position, and also to buy in at the lower end of these channels as well. This has provided some fantastic opportunities for gold. So again, Monday at the moment, we're seeing this usual pullback counterflow move. I would look out for the potential support to be coming this week in midweek, Tuesday and Wednesday, and then from Thursday and Friday, the potential for further follow through. And of course, if we can get a break later on this week above the recent swing highs here, if we can clear above this consolidation and really have a confirmed move, this is where gold can pick up a lot of momentum. You also want to keep a very close eye on the correlations here as well. So silver so far this month is up just under 3%. You can see where it's now broken out of the recent channel, and silver, usual counterflow move that we're getting at the start of the week here, under a bit of pressure on Monday, but I would definitely keep a lookout for this market, particularly on the higher time frames. If you go out to the weekly chart for silver, if silver is able over the course of this month to break and clear back above the $15.75 handle, this is where silver can really start to build up some momentum here later on into May. And certainly strong months for silver tend to be June and July. So this is where you have the potential for much more follow through, and the gold silver ratio as well, which is currently breaking down, signifying silver to outperform gold. The gold to silver ratio broke out recently to all-time highs of 125 to 1, which I'm sure you know means that silver relative to gold is the cheapest it has ever been when we broke out to that 125 level. So silver has a lot of catching up to do, and just be mindful on some of the higher time frames here that silver is certainly basing, and it wouldn't take much of a move here to break back above the highs here, the swing highs, and really start building up momentum into the summer months, which are typically more supportive for the metals. So what we're saying here at the moment is typically gold can be under pressure into May, the first couple of weeks. What we tend to see then is a bottoming formation. You want to take advantage of the counterflow, where often this provides some great opportunities to buy in lower and then capitalize on the breakouts that you often get later on in the month, not only in fact on gold and silver, but also on platinum. So platinum has started to build a base in the last few days here as well. Platinum is coiling and consolidating below $800 per ounce at the moment. In fact, in the latest week, we've continued to find support just above 755 US dollars. So if platinum is able to also hold this basing formation, and then over this month break back above the recent highs here. So back above, first of all, the $800 level, which would be ideal here for a breakout, and then start to build some momentum back above the $850 per ounce zone. This is where platinum can also stage quite a significant recovery in the following weeks here. And that's definitely a trade that you do not want to miss, especially as we move into the summer months, which, as I mentioned, can be quite supportive for the metals. Then moving over to crude oil, bear in mind that we have 10 days now until the June contract expires. And you remember, going back to the May contract expiry caused oil prices for US oil to drop all the way down to negative -$40 per barrel. An absolutely historic move. And there's a lot of concern that when we get to the end of the June contract, which is in 2 weeks' time, the oil will then start to correct lower as well as we get towards the close of that contract, where we still have the same storage issues. So bear in mind, for the June contract, this is where we might start to see corrective price action. Certainly, we're now finding resistance on US oil around the $26 per barrel handle, and really it would only take a break back below the recent weekly lows here to start building up some momentum, breaking them back down towards 22 and then $20 per barrel here. So we're also consolidating on US oil at the moment. Now, the anticipation is that over this week we are looking for more dollar strength. We're positioned very nicely for the dollar index to the long side. We've really been able to capitalize on this in a big way over the latest month. A lot of this dollar strength has played out perfectly. So I would look out for this over the course of this week, the potential for the dollar to pick up further momentum. So far this month it's up 1.26%, and this can put further pressure on commodities such as oil, gold, silver, platinum, and so forth. Now, what I would be looking at here over the course of this week again would be crude oil to potentially continue to consolidate, but if it was to break below the lows here, the weekly lows, then I could easily see a move back towards 22 and then $20 per barrel, and we may start to pick up further momentum to the downside as we get closer to the expiry of the June contract, which is going to be in 10 days time. So certainly that's a trade opportunity to keep on the radar here. You have to bear in mind that crude oil over the last week and a half has more than doubled in price. Absolutely incredible moves, but now we could start to see a correction as we go into next week. So just be aware of that, and just be mindful again that on gold, silver, and platinum, we're seeing that usual pullback that you get at the start of the week here, and also over the month of May, particularly the first couple of weeks of the month. This is where the dollar index builds up momentum, can put pressure on the metals, but ultimately this could set up for some great buy opportunities here to position yourself correctly for the rallies that we often get into June and July here on gold, silver, and platinum. So just really have those on your radar. Now, as always, it's very important to make sure that you have an edge in the markets, and have a think about that yourself. What is your edge? Because I can tell you that technical analysis alone, as I'm sure you're aware, is not going to give you an edge. Many technical strategies out there are outdated, and so are the indicators being used by many new traders as well. If you do find yourself being constantly chopped up in the markets, it's very likely that you're just not looking at enough information. This is where a research-driven process is going to give you that edge, where you're aware of cycles in the market, trade flow, what the hedge funds and money managers are doing versus the retail trader that is often on the wrong side of positions, or they're getting prematurely stopped out of trades which otherwise would have gone on to be profitable for them. You also want to take into account fundamentals, geopolitical news, seasonality, trade flow, market intelligence, data, and this will really help you to have a significant edge in the markets, where you're not just going to be relying on 100% technical analysis. So with that, if you would like to learn a research-driven approach to the markets, there is an opportunity for you to join us at the Gold and Silver Club and join a community of successful traders. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars. You have access to real-time trade alerts, trading research and market insights, access to our private Members Academy membership site, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.